Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. This is Daniel Lam, your host for the podcast. Last Friday was a strong wake-up call for many investors, dashing the hopes of many for a Fed pivot. The non-farm payroll came out stronger than expected. It rose by 263,000 versus consensus at 255,000. And unemployment was down to 3.5% versus consensus at 3.7%. This set of numbers means that the Fed is unlikely to stop hiking interest rates aggressively. And the S&P 500 gave up nearly all of its weekly gains by the close on Friday. Now, all eyes will be on the US CPI inflation figure this Thursday. It has to be said that this year, almost every core CPI print has come in 2 to 3 standard deviations above or below the mean consensus expectations. But there are some areas where numbers could surprise on the upside this time. For example, used car prices, as well as airfare prices, where domestic and international plane tickets rose by about 5% in September, which could add to the core print. So what should investors be doing now? Well, we believe that talks of the Fed pivot is really too soon, from the continued strength of the jobs market, and also in the Fed's and many other central banks' commitment to fight inflation at the expense of growth. As a result, we continue to see risky assets under pressure. For equities, we believe investors should continue to trim their exposure at such levels. They should raise cash or rotate into high dividend equities to increase the overall defensiveness of their portfolio. There is a reasonable chance that S&P 500 would start testing the support zone at 3250 to 3550. On bonds, we retain our view that US 10-year Treasury yield could test 4% towards the end of the year. We would use the window to reduce our exposure to DM government bonds and look for opportunities to add to DM IG corporate bonds or Asian dollar bonds, which are our preferred areas in bonds. That's all from me today. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.